Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's update our in the gold market. So as we said, currently since market is calling around important targets, which is the 30-40, we already talked about this. We have the extension on the weekly chart that has been completed, market stands slightly overbought on the monthly chart. Odds suggest a possible downside response, downside reaction on the current level. Besides, lots of big events have happened recently and market just needs to take a breath. So this is background. It's technical, it's fundamental. We have the reasons. The same reasons from the comes from the Fed. As I talked about this in today's that actually Jerome Powell comments are not quite dovish, and that also may play some role in the current circumstances. At least we see that dollar is becoming a bit stronger, but not too fast. So whatever it is, currently our tactic remains the same. We said that since the probabilities suggest possible retracement, this will be tactical retracement, nothing actually serious, nothing that could break the overall trend. But to use this retracement, we have to wait for patterns. And we'll just keep watching. So since the last time the pattern that we were considering has not been formed, we said that's okay, so we're just waiting for the next. And we said that probably it should be the hand shoulders, just a bit of the larger scale. Currently you can see that it totally takes the shape. On the fall time frame chart we have this kind of hand shoulder shape. On the fall time frame chart we have also a reversal session here, bearish reversal session, which is good sign because it has been formed right on the top of the right arm. And we said when you're dealing with such a patterns, especially on the gold market, there are only 2 points for entry that have low risk, as in terms of the cash and in terms of the probability. This is neckline and the top of the right arm. Because the top of the right arm is invalidation point, and where you're taking the position in invalidation point, it means that you could place very tight stop. So this point has the best reward to risk ratio when you're taking the position there. And the neckline is just because in the 90% of cases, forming the hand shoulders leads to the pullback from the neckline. Sometimes it happens that market is not completing the hand shoulders, just showing direct downside breakout, but these cases are not as often. So more probable that you will get the pullback. So and besides, the entry around the neckline already give you position for a case of the possible hand shoulders failure. Because as a rule, if hand shoulders starts failing, market never return back to the neckline. It usually starts flirting around, showing early upside reversal once again, and you already stands possessed with this scenario. So this is a big advantage to consider position taken around the neckline. And if you take a look on the lower time frames on the 30-minute charts, you could see that both scenarios could give you great results. So this is buying on the neckline. Snow flaws, it lets you to get the money on a forming on the right arm, and the worst result that you could get here is the break-even. So you're just out getting nothing, but without any loss. Taking position in an invalidation point on top of the right arm also give you a good result. For now, it seems currently, at least, we do not see signs of the failure. So this hand shoulders has 2 targets. First is 30-15, so OP. XOP stands around 3,000 even, 29.96, and the XOP actually agrees with the previous stop. As I intentionally marked it with the circle, showing you the actually level to consider, because all other major levels stand significantly lower. So, for example, the minimum target of the butterfly that has been formed here is 29.70. This is the story of the future days. If market bears will have enough power to show so significant retracement here. But since we have the particular pattern in place, we have to follow the targets that it provides. And that currently seems some ultimate target for this pattern. For a big pattern, for a big target, we need the bigger pattern. So maybe it will be formed later. We will see. But for now, that stands in our focus. What we could do in the current circumstances. If you have taken position, that's great. You could try to keep it. If you don't, but you would like to sell, you will have to take some compromise decision, because you can't take position here when the placing stop above the C point, because your target is at least 30.15. So we don't know exactly whether the market will keep going lower. We even do not know whether the market will really follow the hand shoulders. That's why I take too much risk with the placing stop above the C. This is not a good decision. So you will have to find some compromise placing stop somewhere that maybe is not vital for the pattern, but that lets you to get positive risk-reward ratio. So the only thing that I see here currently is chances to use this particular reversal bar that is forming here, trying to take the position here and placing tight stop somewhere above this area. Because no other ways currently to possess yourself with a possible downside continuation, I do not see, with a reasonable risk. So, or you will have to wait for something else. I don't know. Maybe when the OP will be reached, market starts showing some bounce, something will be formed. I do not know. But in the current points, at this point, that's probably the only thing that you could follow. Or the alternative scenario, which has the less probability to success, I mean that you will have the less chances to get the position, is to wait for kind of the maybe ABCD pattern. So maybe market will form here some kind of the minor Gardner triple to sell closer to the C point. In this case, you will be able to take the position with the placing the stop right about the C. But as you understand, when the market is completing already the right arm, chances on a deep retracement, at least by the nature of the pattern, actually are not significant. So you just could get no position in general. Or you could combine these both scenarios, try and take minor position, small position here, and see what will happen. So at least you will be possessed with the small position if downside breakout happens. So that and towards what we have currently on the gold. Currently we have only intraday stops, so we're trying to trade intraday. Since the hand shorter stands in place, we do not see any signs of failure yet. We are not considering currently taking any longs by far, and see how market will resolve this situation with the hand shorters pattern.